Good evening. This is the Elliott Wave update for the NASDAQ 100 for Wednesday, November 10th, 2021. Excuse me. The NASDAQ did attempt to rally first thing out of the box this morning. And actually, it was a pretty decent rally and managed to get itself up to 16,226 before the sellers returned to Tesla and then started to bash Amazon, Advanced Micro, Apple, Google, Facebook, Microsoft. And it pretty much falls directly in line with what I was talking about. These are the stocks that we saw the strongest short squeeze over the last several weeks. And so the message might be out. You know, this is done. Thank you for bringing the prices higher because now we all need to sell stock, et cetera, et cetera. Whatever the situation is, I do believe that it has tipped into making it clearer that there is a trend change afoot. So what I've now done, because the market actually did come down and break a zone that kind of seals this, at least this fifth wave into place, which takes away the probability or the possibility that this was going to end up being three waves down and turn and race go above 16,448, go up to an additional new high, maybe get above 16,500. That, I believe, is not going to occur. However, can I totally rule it out? No. Why? Because it's the NASDAQ. Stranger things have happened when somebody has determined they need to push a bullish agenda for whatever their reason is, and they come in and they start buying. Nonetheless, I have labeled the primary fifth wave as complete at 16,448. I am very likely going to be putting in that cycle degree above that because these are the levels that I believe are finishing. So I think initially we are starting lower in what will ultimately get labeled in intermediate degree, either 5 waves down or an intermediate degree ABC. So depending on how this first 5 comes out and how then the market plays after that, we actually need to get the first 5 through 5 in before we can determine as to what that larger structure may or may not be. So what I'm working on now is I put this in, I've run Fibonacci's for the entire length of on an intermediate degree, so that we're starting to look at what possibly could be corrected moving up to that primary degree. So we are in the very beginning stages, and I'm beginning to count it from the minor degree. And so now I'm going to drop it down to the hourly chart and then open that up a little bit so we can take a look and see what actually is now happening internally that really solidified what I believe is going on. First of all, I'm going to open it up so I can show that fourth wave. And here we are into what's now been taking place the last couple of days. Here's the high, here's the top, 16,448.50. Here's wave 4. So this wave 5, I'm saying is not complete. Why? Because that came down and broke below 15,980. It broke it by 70 points. And so that's enough. It broke it by enough to put this in place as the 5, which then sealed it 2 degrees higher, likely 3. So we're coming in the minor degree. We have 1, 2, 1, 2. Today's activity cleaned up a lot of what I was thinking here, 1, 2, 1, 2. So I just experience 1, 2. This whole thing ends up being a wave 2, A, B, C. So now we start to 1 of 3, 2 of 3. So we're dropping now in the 3 of 3, which in and of itself is subdivided. So we have the minor third wave in action. It's subdividing. We start dropping in the 3 of 3, right? Minute 3 of minor 3, and it starts to subdivide. So within that, it appears, and I believe that it's going to follow similar to what is going on in the S&P, that the 1 and 2 are basically right here. And then this is 3. So we got 1 and 2, and then this little internal third. 1, 2, 3, 4, 5 will be this 3. We get another 4 or 5 will be this 3. We get another 4 or 5, and it will be that 3. So if this is the 3, we got the 4, we get another 5, that's going to be that 3. We get a 4 and a 5, and that's going to be that 3. Sorry, I will put in one too many. So what I then would put that label on, where my expectations are going to come in, is that this is the first support level in terms of this larger intermediate 5 is 15,648. But I think that what I'm basically looking for is it to come down towards 15,768 to complete the third minute 3, possibly even the minor 3. So we'll have to let it all play out. 3, 4, 5 of 3, 4, 5 of 3. And then a 4 and a 5 to complete the initial first 5 down. So yes, I think it's very, very likely that this initial 5 down will bring us down to here or lower. We can continue to move down and see that we have stronger support at 15,400. That could be a place for the initial first 5 down may come in. Again, remember, this is going to turn into a larger, longer, protracted corrective phase. And as I laid out last night, I gave all the reasons and why things are bullish, but what needs to be tossed and turned and corrected first, how it's going to be paid for, how you're going to collect the money, et cetera, et cetera. So there's a lot of moving parts still to be put into play. And in advance of that, the market's going to start reacting to how they're going to pay for it. That is by taxing the very wealthy, taxing the companies that have basically skirted paying their fair share of taxes, corporate taxes, for 20 plus years. So there's a lot to get out there, and we're starting to see that come in as people start taking their profit so that they don't have to pay on unrealized gains, take your pain all at once, and then basically starting over. So there's a lot of activity that's going to take place. And this is all in my opinion. And that's going to support and guide where all of this should end up. So if you're thinking what could really toss this over the edge, a lot of necessity, that it's overvalued. That would be one thing, that longs are going to have to be liquidated because other things have come up. And so there's going to be change. And it's not going to be easy because it's going to become more difficult to build the bullish picture than it is to just accept we're going down simply because it's too overvalued, simply because it got pushed too hard, because these levels can't be sustained. I.e., we get even big companies that should now be back making money. They're going to make an excuse. Disney came out. They didn't like the earnings. Disney dropped. And finishing up about $8 lower than where it closed. And they tried to rally it back, but got stuck. Now it's done. And we will have to wait and see how the market will broadly accept Disney. But I think if the market's starting to sell off, Disney's going to go right with it. There'll be more reason for it. So as earnings are coming out, we are seeing that there's that initial don't like them. And then they came back in, such as in Facebook and in Google and in a lot of the other stuff. And they bought them up. They took them up to new highs. And then they're selling them off again. So take the information that we're getting in terms of how everything's going to be paid for, what is changing in the overall picture, and then you're going to piece it together. So what I'm looking for here is for a continuation to the downside. We finished the third, and tomorrow's a holiday, by the way. It's Veterans Day. Banks are closed. So the bond market, I believe, will be closed tomorrow as well. But as far as I'm aware, equities are open, and I'm planning on trading because it's no longer a federal holiday in terms of, you know, one of the ones that we get off, that the markets are closed for. And so it could be very slow, but I'm looking for continued downside. That'll complete this third, then a 4 and a 5 to complete this third, and then a 4 and a 5 to complete this third. That's what I think could bring us down into this area. Definitively, I think we should at least get down to here. And basically, it's really 200 points from where, as always, we got 250 points. That's kind of what we did today. So we just repeat that tomorrow, and we're there. And if the market's thin, orders can push it down there under light volume. I don't suspect that'll be the case, to be honest with you, because of where it sits. I think that it will trade, but they're going to be filling a lot of orders on the way down. In any case, I think that we need to continue to trade smart. We need to realize that what I'm putting together now is not to be cast in stone, but if it is giving more weight to that, this is actually what is happening as it fits. And so I can fit the characteristics and the personalities of the waves into what we can expect. So I would expect some additional decline, because if you remember what I was talking about was if we get into the 3 of 3, it has its point of recognition. That occurred today. And you can see it was basically 1, 2, 3, 4 hours of selling. You know, that's market lower, market lower, market lower, market lower, and just kept marching for 4 hours. And it was 325 points later. That was a 3 of 3. That was a point of recognition. That was like, oh, we're going down, we're getting out. We're taking profit, we're changing our position. Whatever goes on, went on. I suspect that we'll get a little bit more of that tomorrow as we complete this next third up. And then we'll get more of it again as we complete the next third up. So the 3 of 3 is done, but then we've got a 3 of 3 to yet finish. We've got a whole series of them, I hate to say, at least 2. This one looks like it'll be done. Then we get a 4 and a 5, that's going to complete the next one. So I would expect the 5 to really push. Okay, so that's our outlook for tomorrow. Upside should be limited. If the bulls are going to step back in and stake a claim that this was all foregone and we remain bullish, they are going to have to push it back above the 200 at 16,076 and get it to close above it to present a more bullish picture. Okay, so if that does happen, get out of the way. Don't fight it. Going down, if it continues to break down, we'll find support. There's some right there. 15,768. Then we have 15,650. And then more Fibonacci can be put in. You can run Fibonacci's from here down to the bottom of the 3 to get to what we think the 4 is going to be. We start to run these to the downside to see what this 5 is going to be. You can put it from here down to there, up to wherever this 4 tops, and then it'll give you what this little 5th wave should be like. So there are Fibonacci extensions and there are retracements that you can put on your chart, and that'll help to guide you. Trade smart. Trade according to your moving averages. Use the moving averages. Use the Fibonacci extensions and retracements, and use the Elliott to guide your trades, entry and exits, and what to expect. So begin to understand the characteristics of each individual wave. And then as you put that picture together, you will know if we start to accelerate, we're in that 3 of 3. We're in that zone of recognition. Okay, next update will be on Thursday, the 11th.